Hi, everyone. I'm Noelle with Verivest, and here I have with me Drew from CALCAP Advisors. Thanks for joining.
Thanks, Noelle. Thanks for having me.
Yeah, of course. Okay, so let's just get started, and I want to know a little bit more about how you got to where you are today. What's your origin story, and a little bit about you.
Yeah, so I've been with CalCap is about a 12-year-old company. We started in 2008. We're based in Pasadena. I happen to be sitting here in Phoenix today, so I'm based in Phoenix, but our company is based in California. And I have my roots after school a long time ago in public accounting, and then got into the mortgage business. This is a strange story, but got into the mortgage business back in the early 90s when kind of the mortgage business was still in its infancy. And I landed with a bank based in Sacramento while my wife was going to graduate school. And then we relocated to Phoenix in the early 90s. And I landed with another company that through some relationships, that company was called IndyMac Bank, which was kind of a startup back in the mid 90s. And if you know anything about mortgage business and financial institutions and the Great Recession of 2008, IndyMac is a prominent name in those days. And so, 2009, 2010, or 2008, 2009, when IndyMac failed, my partners and I started CalCap, which was a company that was kind of built as a result of a hobby that we had been doing at the time while we were working for IndyMac, where we were buying commercial properties. So it was kind of a hobby, a business model that was kind of developed by our founder, Ed Alloy. And then it kind of morphed into an actual business and a company. So out of IndyMac came CalCap, and here we are 12 years later. Essentially what we do is we own and operate workforce housing around the Western United States. We have a couple different business verticals, but mostly what we do is we own and operate apartments. We also have a fairly robust lending business. We make loans to guys like us that buy income-producing real estate, and we also have a property management division that manages the properties that we own, as well as manages for other owners. So we're kind of we call it our three-legged stool. And 12 years later, my partners and I have, we're very grateful. We're very fortunate that we seem to get in at the right time. Real estate investments usually a lot of luck. We've been pretty lucky and fortunate. So we've grown quite a bit. We're in 7 states now. We've owner managed about 3,000 units. And then we have a bunch of other investment vehicles that we offer as well. So that's kind of a little bit about me. I'm our Chief Operating Officer. That's kind of the title or function I have here. We all kind of wear different hats depending on kind of where our areas of expertise are. And so I use a lot of my accounting background. We don't really have a CFO. We kind of tag team that a little bit. It's been 2020, as everybody knows, has been a crazy year. So we're just fortunate and grateful to be still standing and trying to grow our business through this and this is even more unprecedented than what we experienced in 08 and 09.
Right. Yeah.
So in a different way, but we've been through some cycles, and this is a unique one for sure.
For sure. Yeah. Awesome. Great. Okay. How do you source deal flow, and what is your guys' acquisition strategy?
So, we're, I guess, first of all, we're bullish on workforce housing. We think it's a great investment to be in. It's been a great investment to be in. We think it's got still a lot of legs left. We think there's compelling reasons why rental housing, workforce housing is going to be a really strong asset class, probably for the next decade. I'll leave politics and out of it, but we think it's a place where we are fortunate to be in, unlike in retail or hotels or hospitality, things like that. That's just not our business. We know, which was workforce housing. I think that we source deals. We kind of do it a couple of different ways. I mean, the obvious way is we have a lot of broker relationships, guys that are selling workforce apartment communities that will reach out to us every day. We have a full-time acquisition team that consists of a leader, one of my partners, a couple of analysts, someone that kind of focuses on demographics and does analytics all the time. And so all we're doing is taking information that comes to us publicly from brokers around the country. We look at, I think last year, 2019, we probably looked at 130 deals, and then we kind of funnel through that. And not every deal fits our buy box. We have an age requirement. We have a locational requirement. We only own in markets where we feel like we have a pretty good handle on the market conditions. And so, certain size, like we won't buy anything smaller than, typically 100 units and not really anything bigger than 300 units. We're value add guys, so we like to do a lot of heavy lifting associated with rehabilitation and remodeling and bringing older apartments, to current. So we're not really looking for newer stuff. Really, we look at stuff that's probably between 1980s built and 1990s built. Mm-hmm. We have a fairly robust off-market acquisition strategy, and that's, everybody says they do it a little differently. Some guys use AI, some guys use business intelligence, some guys are just literally picking up the phone and calling owners. We have a hybrid approach where we use some artificial intelligence, some technology, but a lot of it's just kind of knowing the market and knowing where there might be opportunities. Mm-hmm. It is very competitive right now to buy apartments. We joke internally, you wouldn't think that we're in the middle of a pandemic based on the prices that we're seeing. And so you have to be cautious. But like I said, we're very bullish about workforce housing. We think it's a great asset class to be in.
Awesome. Great.
What was the second part of your question was?
It was, what was your acquisition strategy? And actually the next question too was, what key markets do you operate in and why? And I feel like you kind of answered that as well.
Yeah, we own, when we started this company, we kind of went to the worst impacted markets, which at the time were Phoenix and Vegas. And so that's where we kind of cut our teeth. And so those are our primary markets are Phoenix, Tucson, and Phoenix and Tucson is now becoming Phoenix, Casa Grande, Tucson. It's just one continuous market. Las Vegas for sure. We own 3 assets in Albuquerque. We like Albuquerque. We have some assets in Dallas and Fort Worth and in Austin. We own a portfolio of homes in Little Rock, Arkansas, of all places. And so that's, we kind of focus on the smile states. You may have heard that term, which is kind of the South U.S. We like to invest where we can get to quickly. And so we don't own anything on the East Coast yet. We're looking at some markets there. But yeah, our core markets are Phoenix, Vegas, New Mexico, Albuquerque.
The warm ones.
The warm ones. We don't own anything in California intentionally for right now.
Right.
Although we have our corporate headquarters is there, but we don't have any investments other than our corporate building in California.
Awesome. Great. Okay. What is your investment philosophy and how do you determine whether a deal is worth doing?
Well, so that's easy. We raise money for the most part from a very closely knit network of friends and family. Now, when I say it's a closely knit, but it's a fairly expansive network. We have 340 individual investors. I think 330. It changes as we buy and sell things, but we have over 300 individual investors that have invested with us, that have money with us today. So our first focus is preservation of capital. We don't do anything where we think we're going to lose a nickel of our investors' capital. So it makes us a little more conservative. We're not speculators. We'd rather get the single than try to stretch it into a double. We've done very, very well by our investors, just like I said, because of some timing. some insight, some thoughtfulness. Clearly, the way we execute our acquisition, our rehabilitation, our management strategy, we've done very well by our investors. Having said that, I think we're still focused squarely on making sure that we don't lose $1 of their money, and that's our primary focus. I think after that, it's really focusing on demographics, being realistic, being transparent. We'd rather underpromise and overdeliver. That's just kind of our nature. And we're big equity investors in every one of our transactions, so it's our money too. And we're just interested in being in this for a long haul. Most of our investors, I would say, we're an alternative investment sponsor. I'm sure you've heard that comment at Verivest. We're not BlackRock, we're not an institutional company. So, when we think about investors, we know that, they're likely giving us their last 5 or 10% of their investment portfolio. They're not investing primarily through us. They have a diversified portfolio. They might have stocks and bonds and options and things like that. But I think they look at the alternative investment as kind of their last bucket of investment. And so we're realistic about our ability to grow our portfolio, knowing that it might take us adding more investors, but at the same time we have a little bit of stranger danger when it comes to investors too. We like to keep the family close, and so we grow things usually by word of mouth. What started with maybe 10 or 15 investors now has grown to 300, and that grows every month because investor A tells investor B that he invested with us. We were transparent, honest guys. We did a good job with the return. And it kind of creates new investment relationships, which we love. So
great. Love it. Okay. How do you generate value once you've made an investment? And what do you do to just ensure your return on capital?
Well, I think, we're value add guys. That's kind of where we made our bones. We're looking for we're not looking for super old stuff, but we're looking for older properties that are either being mismanaged or there's opportunity for us to raise some money, to do some work, to turn some units, to do some cosmetic upgrades, to bring current some outdated, some dated inventory. And we've, every project that we typically go into, we know that we're going to set aside a pretty good amount of money for CapEx. And that allows us to kind of upgrade the appearance, upgrade the visibility. We spend a lot of time on SEO, website development, creating an online storefront for all of our communities, which is a little bit unique to kind of the properties that we own. You don't see it often. You see it more with bigger institutional guys that own A-class properties. But we've been able to do a good job there. So I think that, those are some things that we bring to the table is when we're investing, we know that our strategy usually is kind of a 3-part approach where we have the physical plant upgrade. We have then the online upgrading, and then we have obviously our property management execution, which is by having in-house property management for us is key. We manage what we own. So.
Okay, great, awesome. Who are the key players involved that allow you to execute your acquisition and asset management?
So we've got, myself, 3 partners. We've been at this a long time together. My other 3 partners were college roommates, so they've been together 30 plus years, not to give our ages away. But we also believe in decentralizing, the authority level. Like we have our lending business is run by its own CEO. We have an executive committee where everybody in the business verticals that we operate are participants in that executive committee. So we're very inclusive. We like to involve, because of this 3-legged stool, there's lots of synergies between our businesses. So we don't do things on an island. We like to include our key leaders. So we've got Len, who runs our lending group, who's been in the mortgage business for as long as I have. He ran Citibank's mortgage bank, so he has big institutional experience. We have Lonnie, who runs our property management business, who's worked for public companies, like we all have public experience. So we have institutionally minded and trained leaders that we've given these businesses, and we've said, okay, this is your business, and run it as an entrepreneur would run it. And so that works well for us. We kind of ham and egg a lot of what we do. Ed is our founder. He's our visionary. He's the one who kind of sets the tone for the company. Pat Wakeman, my other partner, is kind of focuses mostly on capital markets, which really relates to acquisitions, dispositions, and financing. Mark Mazzillo, our other partner, is, he focuses a lot on investor relations. That's kind of what his interests are. So he's always working on and talking with and meeting with and entertaining investor clients that have invested money with us. And then we've got Josh Holman, who kind of is our head of acquisitions. Josh has been with us since the beginning. So we kind of all grown together, and we're going to kind of keep certain things. Certain people are good at certain things, and we kind of like to make sure that everybody's doing what they're best at.
Yeah.
But in an inclusive way where everybody's got, the hierarchy of our company is pretty flat.
Yeah.
On purpose, though.
Yeah. That's great. Awesome. Well, thank you so much, Drew. It was so nice to meet you and talk to you.
Yeah, my pleasure.
Yeah. Thanks so much.